Hello, this is Ansar Hadi with the insurance company. Auto insurance basics. Auto insurance protects against the financial loss in the events of an accident. It is a contract between the policyholders and insurance company. The policyholders agree to pay the premium and the insurance company agree to pay losses as defined in the policy. Auto insurance provides property, liability, and medical coverage. Property coverage pays for damage to a theft of the car. Liability coverage pays for the policyholder's legal responsibility to other for bodily injury or property damage. Medical coverage pays for the cost of treating injuries, rehabilitations, medical coverage, and sometimes lost savage and funeral expenses. Most states require drivers to have auto liability insurance before they can legally drive a car. Liability insurance pays the other drivers medical costs, repairs, and other costs when the policyholder is at fault in an auto accident. All states have laws that set the minimum amounts of insurance or other financial security drivers have to pay for the harm caused by their negligence behind the wheel if an accident occurs. Most auto policies are for 6 months through a year. A basic auto insurance policy is composed of 6 different kinds of coverage, each of which is priced separately. Civil, badly injury, liability. This coverage applies to injuries that the policyholders and family members listed on the policy caused to someone else. These individuals are also covered when driving other people's cars with permission. As a motorist in serious accident may be sued for large amount. Drivers can opt to buy more than the state required minimum to protect personal assets such as homes and savings. Medical payments or personal injuries protection. This coverage pays for the treatment of injuries to the driver and passengers of the policyholder's car at its broadest pipe can cover medical payments, lost wage, and the cost of replacing services normally performed by some injured in an auto accident. It may be also cover funeral costs, protective property damage liability. This coverage pay for damage policyholders or someone driving the car with their permission may cause to someone else's property. Usually this means damage to someone else's car, but it also includes damage to lamp, post, telephones, poles, fence, buildings or other structure hit in the accident. Collisions. This coverage pays for damage to the policyholder's car resulting for a collision with other car, an object or a result of flipping other. It also covers damage caused by potholes. Collisions coverage is generally sold with an deductible of about $250 to $1,000. The higher the deductible, the lower the premium. Even if policyholders are the fault for an accident, conclusion coverage with reimburse them for the cost of repairing the car minus the deductible. if the policyholder is not at fault. The insurance company may try to recover the amount it paid from the other driver's insurance company, a process known as subrogation. Subrogation. If the company is successful, policyholder will also be reimbursed for the deductible comprehensive. This coverage reimburses for loss due to theft or damage caused by something other than a collision with other car or objects such as fire, falling objects, missiles, explosions, earthquakes, windstorms, hails, floods, wildlands, and riots, or contact with animals such as birds or deer. Comprehensive insurance is usually sold with the $100 to $300 deductible. deductible. Though policyholders may opt for a higher deductible as a way of lowering their premium. Comprehensive insurance may also reimburse the policyholder if a windshield is cracked or shattered. Some companies often separate glass coverage with a or without a deductible. States do not require the purchases of collisions or comprehensive coverage, but leaders may insist borrowing carry it until a car loan is paid off. It may also be a requirement of some leadership dealership if a car is leased. Uninsured and underinsured motorist coverage. Uninsured motorist coverage will be reimbursed the policyholder, a member of the family, or a designated driver if one of them is hit by an uni- uninsured or a hit a run driver. Underinsured motorist coverage some and to play with the fault driver has insufficient insurance to pay for the other driver's total loss. This coverage will be protect a policyholder who is hit while a pedestrian. Homeowners insurance basis. Homeowners insurance basis provides financial protection against disasters. It is a package policy, which means that it covers both damage to protect and liability or legal responsibility for an injury and property damage policyholder or other families caused to other people. This include damage caused by household pets, damage caused by most disaster in covered, but there are exceptions. Standard homeowners policies do not cover flooding, earthquakes, or poor maintenance. Flood coverage, however, is available in the form of separate policy both for from the National Flood Insurance Program and from a few private insurance. Earthquake coverage is available either in the form of an endorsement or as a separate policy. Most maintenance related problems are the Standard homeowners insurance policy includes four essential types of coverage. They include coverage for the structure of the home. This part of a policy was to require repair or rebuild a home if it is damaged or destroyed by fire, hurricanes, hails, lightning, or other disaster listed in the policy. It will not pay for damage caused by a flood, earthquake, or routine wear and tear. Most standard policies also cover structures that are not attached to a rated for about 10% of the total amount of insurance on the structure of the home. Coverage for personal belonging, furniture, clothes, sports equipments, and other personal items are covered if they are stolen or destroyed by fire, hurricanes, or other insurance disasters. Most companies provide coverage for 50 to 70% of the amount of insurance on the structure of a home. This part of policy includes off-premise coverage. This means the belongings are covered anywhere in the world unless the policy holders has been decided against off-premise coverage.